starting today. We're going to explore technical analysis in stock investing. Technical analysis is something every investor should know, especially retail investors. Why? Because it's simple, practical, and direct. Anyone can learn it to help you learn faster and more effectively. I've designed a beginner-friendly series on technical analysis based on my own experience. This series covers major tools and methods used by traders worldwide. If you're new to the stock market, this course will be very helpful, even if you already know a bit about technical analysis. But want a clearer, more structured understanding, this series is for you today. We start with the first topic. What is technical analysis? Technical analysis studies the price and volume trends in the stock market. It uses charts to show how prices move over time, helping traders spot patterns and signals. Every day, price movements form shapes and patterns on charts, and many of these patterns follow consistent rules. For example, a stock forms a descending triangle, narrowing over time in many cases. It breaks upward, 3 strong green candlesticks in a row, often a sign of bullish momentum. Or a stock surges 3 times, then pulls back twice, retracing 50% or 38.2% of the previous move. This is common. These aren't guesses. They're patterns observed and tested over decades by real traders. Technical analysis is about learning from past price behavior, guide future decisions. Many theories like Dow theory, Elliott waves, and Gann theory are based on real-world experience. But remember, no analysis method is perfect. Just because you know technical analysis doesn't mean you'll make money every time. Trading isn't about always being right. It's about reading the market, adjusting, and surviving. Think of it like this. Trading is like navigating a boat on a river. You must constantly assess if there's danger ahead, rapids, rocks, or waterfalls. A seasoned boatman can read the water and shoreline to steer safely. A seasoned trader can read volume, price trends, and chart patterns to sense risk and opportunity. Technical analysis is like that, your map and compass in the financial river. Let's talk about another concept. How is technical analysis different from fundamental analysis? Fundamental analysis looks at macroeconomics, industry trends, and a company's financial health. Its goal is to figure out what a stock is truly worth. If a stock trades at $10, and your research says it's worth $15, it might be a good buy. If you believe it's only worth $8, then it's time to sell. That's fundamental analysis. But it requires deep economic and financial knowledge, something most retail investors don't have. That's why analysts and economists typically use it. Very few economists focus on technical analysis. If you don't have a finance background, technical analysis is a much easier entry point. But ideally, a smart investor should use both approaches together. Now, what are the pros and cons of technical analysis? Pros: it's easy to learn and apply. Even a simple moving average strategy works. By when price rises above the 20-day average, sell when it drops below. It reflects all market information. Charts show what's really happening. Price includes everything. It works across all markets: stocks, commodities, forex, bonds, even crypto. It gives clear buy-sell signals. Fundamental research may say a company is great, but charts tell you when to enter or exit. For example, if a stock breaks below its trend line and moving average, use SUBM5 if earnings still look strong. Often, the chart gives a warning before the fundamentals show anything wrong. But technical analysis has weaknesses too. Its biggest criticism: it looks at the past. Can it really predict the future? Sometimes indicators fail. Moving averages don't always work in sideways markets. Extreme moves can break indicators. Wave theory doesn't always work in forex. Some people say the market is completely random. They believe in something called the random walk theory, but I don't agree. I believe the market has trends. Sometimes it's chaotic, yes, but it's not completely unpredictable. So in this first video, we covered the foundational ideas of technical analysis. In the next episode, we'll dive into specific tools and methods. We'll explore the major schools of technical analysis. See you next time.